Hello, guys. I'm sorry I haven't done a recording. I really want to be able to do market reviews a lot more often. I need to just have my agenda calm down a bit, and it's slowly getting there. So I got my email inbox reduced down to 10 emails, and I just want to make sure that everybody gets kind of the service that I would like to provide. So I'm going to do a very quick review of the market at the moment, to explain kind of a little bit of what's going on and why it's so choppy, and what we need to see to be able to start trading again with more confidence. So I'll just dive right in. The first thing is looking at the dollar index. We had a very clear up move here. We had higher lows and higher highs, and we hit a level. We hit a previous resistance level, and price is kind of reacting. Obviously, there's a high test there reacting, and I've just put in a temporary downward trend line to just keep an eye on this. And it appears to be pulling back. In my previous review, it was pulling back to the 10-day moving average. It's a very strong pullback. It's a very strong trend, so the pullback could actually be quite strong. It's not inconceivable that it could actually continue to pull back all the way to the 50 fib. Now, for those of you who aren't familiar with Fibonacci levels, please don't be distracted by it. It's just the last thing that I throw on top. It's very simply put, Fibonacci levels are just natural retracements that tend to occur. If we can treat the market as a natural phenomenon, like waves or clouds or whatever, which in effect it is. It's a complex system. We've just applied these patterns that occur in nature, like snowflakes and fractals and all kinds of funny things that occur in nature. And this is just a tool that tends to want to see if there are patterns that are occurring, that it tends to pull back. When it does a retracement, that it pulls back to particular levels, normally the 382 or the 50 or the 618 level. And the real thing is, a lot of people always saying, well, how do you know it's just a pullback and not a reversal? And the truth is, well, I have to pick a direction. And based on the fact that if I look at the weekly and the monthly charts, we are getting higher lows and higher highs. And the market will want to trend as much as it can, or alternatively it'll range. But it doesn't want to keep continually reversing. It can't always be reversing. You'll find that it just couldn't possibly do that, because if it was always reversing, at some point it would be trending even if it was in reverse. So you have to pick a direction based on the fact that this is such a nice strong bullish move. I have to first assume that we are looking at a bullish trend, rather than assuming that, oh my God, this is reversing and we're going to lose it all. So you just have to pick a side, and you've got to stick with something. And so you just allow for plan A being I'm going long, and if I get signs that it continues to go back, I'm going to turn around and I'm going to go bearish. But until then, I'm going to go long, and that's just the way it's got to be. And one of the ways we do that, obviously, is we look at lower lows and lower highs. If price action comes down here and starts to break the previous low, I'm going to get nervous, because at that point, obviously, it's pulled so far back. But you know what? A pullback like this back to the 50 fib line is relatively natural. You're not going to believe this, but a pullback to the 618 is actually even quite natural. However, I'm thinking that the more likely one is this level here. Why? Because the 50 moving average is here. So that it makes more sense that there is more of a confluence of events that would occur around here. And the only reason I'm saying that I do think it's going to pull that far back is because we had a pullback to the 10. It didn't move on. We've had a pullback to the 20. It has bounced and then kind of come back here. So at this point, it means realistically it's either going to bounce off the 20, or it's going to kind of keep coming back and then it's going to bounce off the 50. Now, as it happens, there's a lot of stuff going on in the Eurozone, which is part of the reason that I don't think the dollar and the euro, because they work against each other, and obviously cable, the pound, are working against each other. I don't think they've gone anywhere, because they're all waiting on this news. Now, unfortunately, for a lot of you that had winning trades, if you started about 3 weeks ago, that was great, and you thought you were kind of, oh, this is awesome, I can't put a foot wrong. And then, of course, what happened was you started hitting from about here onwards, you started hitting a series of losers, and you had some winners, but you tended to have more losers. And the reason is really standard, very normal phase 2 pullback in an up move. In any of the currency pairs, the major currency pairs, you would have seen very strong trends, and then you would have been caught in a phase 2 pullback. Now, to be honest, it's in the course material. We do cover it. It's very important. You have to take that into account. Okay, So that is where we are. We are currently in a phase 2 pullback. And to boot, to make it even worse, there's this choppiness that I'll show you in some of the charts. It's occurring in the stocks as well. So there's a choppiness right here. And it's not a coincidence. The fact is that it's pulling back. It's trying to decide if it's going to carry on now or if it's going to pull back further. And so, of course, this is why we're encountering the choppiness here. So I put a downtrend line here just to see if I do think if price breaks above this line and then kind of breaks back above this kind of level, that we can expect it to go long. And the nice thing about that, I think, is that it will trend quite a long way. It'll have quite a strong run. So unfortunately, if you started, if you took your first few trades and you got stopped out, and then you thought, well, maybe you could try it again and you got stopped out again, it's very simple. You were just caught on the wrong side. So the US dollar index is a basket of currencies against the US dollar, and so we can kind of compare the strength of it. And what we're looking for is we're looking to see we're looking to see confluence or similarities in behavior, but obviously inverse versions of it. We're looking to see, for example, if the US dollar is climbing, which means it's strengthening against the euro and pulling back, we're hoping to see an inverse effect on the euro, which is the euro would then be kind of falling and then would be pulling back. So we're looking to get a mirror effect on that, and we're hoping to see that on cable. We're hoping to see it on the Swiss. The Swiss will mirror the Swiss franc, and then we're looking to see it on the yen as well. So we want to see similarities. For the most part, if most of them are acting alongside each other, that's a really good sign that the market is in sync. So, and also you want to look at where they've pulled back to. We haven't pulled back to even to the 38 fib level. So I don't normally use this. I'm putting it in now because I'm wanting to look for extra additional information, because I want to just I need to have borders in place here. The only thing I find interesting is how the 50 fib is and the 50 moving average are kind of aligning here. So I find that interesting. We might find that if the trend is really strong, it'll kick off. If trends are strong, they tend to bounce off the 10 moving average or the 20 moving average and then move on. So it could indeed do that. It really could. I would think if price closes below the 20 moving average, the likelihood is increasing that it's going to come down to this 50 fib level. So for master traders, you would continue to trade it short. And so this is your indication. If you find the price closes below this level, it's probably going to come down to approximately here. And you can look for a support resistance level there as well. Whereas if it doesn't and it goes sideways for a bit, starts to break this immediate downtrend, it might be looking to go bullish. And it can go sideways for a bit as well. So the main thing is just to be cautious of that. And I'm only using that because when I jump to the euro, I want you to see how similar the behavior is. It's bounced off this level. It's broken back up here. It's kind of touching the 20, has reversed. I mean, this is just fascinating to me about how this is reacting. The markets have been incredibly choppy. This is what we were expecting, was a phase 1 move, a phase 2 pullback. There we got a high test off the 20 moving average. The next day we got our reversal bar, so a lot of traders entered short there. We're not the only ones who thought that. Then the market did something really interesting. It pulled back, and the very next day we got the spike, which was actually the gap we got on the weekend. And actually the market opened up here and then on Sunday night and then closed down here on at the end of day of Monday. And so it rejected that level immediately. Now, normally when that happens, the gap will continue to move down. So not only is this, yes, it's a rejection of that level, that is interesting. So I'm looking at today's bar, which hasn't closed yet. I mean, it's nearly 9 o'clock at night. We have a lower low, and it's an inside bar. What's actually happening here is, if this was going to go bearish, why has it not yet gone bearish? The very next candle's actually got a higher low and a higher high. So even though it's a massive rejection candle, it's still, it's still placed higher up. So what's actually happening is this should have been a nice, neat, organized trend, but it isn't. So there's stuff happening here, and we know what it is. If you need to go find a reason, look, watch Bloomberg, and you'll see there's an explanation. There's stuff going on. They're waiting for news, and market's jittery, and it's all kinds of things. And you're going to see this reflected. You've seen it in the dollar index. You'll see it in cable as well. We're going to see it in the stocks. I'll have a look at. So we're looking to see, each particular candle here in sequence is telling us an unfolding story. But I am expecting to see this continue to go down, but it may go sideways first. So it's the same thing as with the US dollar. Then we look at, let's go back to that quickly. Let's have a look here and see what our pullback is. If we do a pullback just out of curiosity from that fib level to there, we have come back, we have touched the 38.2. We've rejected that level. So that is interesting. We are potentially going to go down. We may find this is already on its way down, and the US dollar will then push through. So they all affect each other. So we're looking for a collective, we're looking for a collection of evidence to support one theme. And whether that theme is chaos or whether that theme is, no, it looks like everything's going to start to move, then that's what we have to go with. Because, you're, like I said, you're dealing with a natural phenomenon here. But it'll give you strong indications one way or the other. And so I find that interesting. That's quite key. Now, as we look at cable, cable, as we understand, went incredibly bearish over this. Low tested there, has come up and is going sideways around about the 10 moving averages. Now broken and kind of closed here and is trying to run its way up to the 20 moving average. So it almost looks like it's got a little bit more of a way to go. There's also a resistance level up here. So it makes sense for cable to want to go a little bit further up to touch that. We've seen the US dollars wanting to go a little bit further potentially to hit another level. And of course, the euro is undecided at this point. So we have rejected this level. We may find the euro goes sideways for a bit and then carries on, and we're looking. So the collective story at this point is either indecision or potentially going a little bit further against us. Then we look at the Swiss franc, which looks very similar to the US dollar, naturally. It has come back to beautiful here, broken up above resistance, coming back to test support. At this point, everything is indicating, all of them are indicating that they want to continue in the directions. And that's why it's disconcerting to see what is going on. If these things are wanting to continue, why is it broken through resistance, testing support, sort of begun to kind of move and then faltering. So that in itself isn't, don't worry about these. These are just working on some potential trade things. So these are, what is holding it back? That's basically it. That's the best way to put it, is what is holding the market back? And we know what's holding the market back. It's looking for some kind of indication in Europe. And of course, the politicians are going to, they're going to use as much smoke and mirrors as they can. So nothing you're going to hear is necessarily the truth. Nothing. They're basically cooking the books. And that doesn't matter because that doesn't affect our trading other than the fact that we need to wait for this to kind of make its decision. So I've put a downtrend line here. I want to see, you can see it looks like it's peaking above that. I really want to see price break up and start heading up to this level and then, going on from there. But it's looking relatively good at this point. We're still bullish. It hasn't kicked off yet. And again, I'll review it in a few days' time. If I find that it's starting to falter and go down to the next level, then, and if I can, I'll update it. And we'll look at that. Let's look at the yen. So the yen is doing, the yen is also, this is interesting. The yen was pulling back. This is fascinating. I was really bullish on the yen. I was bullish on cable, and the yen just pulled all the way back down. Strangely enough, it has broken upwards of this downwards trend line. And so that's interesting because it's now sitting at this level. I would like to see it break up above that, but it's also in this kind of just waiting. You need some kind of sense of direction, but it has given a clue when we think about it. The clue is it's gone slightly bullish, and that's interesting. So let's find out what happens. I'm really excited because although everyone's going, I want to take a trade, I want to make that million, I've got according to my personal trading plan, I've got a week left and I've got to get to my first million. So I don't know what the hell's going on. So the problem is, the good news is, the upside is that once it breaks out of that, it'll move. So you need that patience. You don't necessarily get all your trades on a Monday and a Friday perfectly evenly spread out. You'll get them when the market moves. You need to be prepared, and that's why you need to watch and be patient. And when they happen, you milk it. That's just what happens. And you milk it within reason. You need to know when you need to stop doing it. It's like a cash machine. When it's spitting out the cash, you take the cash. When it stops, you don't start breaking up the machine and I don't know. You don't start spending the money until you've got it all out of the cash machine. Now, that's a clue for me. I think that's really interesting. Where we also know it doesn't really matter why. It doesn't matter if it's stealth intervention. You can Google that. It doesn't matter why. The point is it's temporarily broken this downtrend, and that's interesting. So we have this is what I wanted to show you was, again, interesting. Fibonacci levels, don't stress about it. I'll always cover these in our coaching sessions, but it's not crucial. It's a nice little bonus. I just find it interesting that it has pulled back, and this is the 786 level, and it hasn't actually closed below that. I would like to say that I believe that when price comes back so far back that it's a bit of a warning sign as to how much further it can go. A healthy pullback comes back to the 618 level. Anywhere on these three levels, healthy. Those are the normal kind of retracements. It is very capable of pulling back as far as this and carrying on. It can, but I find that it means potentially the strength of the move upwards is not as strong. So certainly I'd be very careful as it comes back up to that level. But we're watching to see what happens here. However, it is important that it didn't close below that level. Well, the probabilities once price closes below this Fibonacci retracement level, once it closes below that, it's run so far back it might as well just carry on downwards. So it's just something. I guess what I'm saying here is it's valid that it can actually go long here. It's not inconceivable. And of course, that's a reaction. That's a reaction of where we've kind of got some good levels here. So yeah, something to take into account. Let's look at the Aussie dollar. Okay, Aussie dollar. Still seemingly bearish, still doing something funny. Look at this. It's stuck between these two moving averages. So we have no set direction at this point. We need price to touch and kind of commit. It's like a dude before his wedding, just won't commit. No, I'm just kidding. No, but it's like he just won't commit at this point. We've got a double bottom here. Interesting, and price action's broken this recent high. You'll find some similarities between this and gold, which makes some sense. See that on the Aussie dollar. In fact, we had the same thing here. We had lower lows, but we had some divergence, which we could talk about in coaching sessions. But yeah, and then let's have a quick look at gold. Gold kind of looking like it's going bullish, but man, is it volatile. Look at that. I mean, it's like, okay, well, I'm bullish on this, but man, you enter trades and you would have just got sliced. You're just getting blended. And I'll demonstrate this as well on the footy. So it's just crazy. It's much more volatile than it needs to be, which means if you're trading stuff today, guys, you need to be looking at the hourly and 4-hourly charts and checking maybe your stop should be wider. And obviously you manage your risk accordingly. So let's have a look at the different indices. Interesting reversal kind of pattern happening here. We've broken previous highs, so price comes, reverses, comes up, tests a new high, testing up to the 50. And this is the Dow Jones. So that's interesting. It means it's found some kind of a level over here. Let's just put it in and then see what we're looking at. Yep, there seems to be a bit of a level over there. Let's just go further back. Yeah, there's a bit of a thing. I'm not entirely happy with that. I'm more inclined to... there's something there, but I'm not really happy with that. It's not a crystal clear kind of level with me. That's... I kind of want to say it's bearish. I'm kind of looking at it, but the truth is it's broken recent lows. So in the short term, it's doing lower highs and no lows. But if we look at the weekly, if we switch to a weekly chart, we're still in an uptrend, guys. And so it takes a long time for the stuff to convert onto the weekly chart. And when you see it start to break the weekly, and obviously you will get to a point when you are trading it. In other words, I guess the question is we should still be looking for long entries on this until at such time, it starts to come down and break more and more lows. Then we start to shift our trades to bearish trades. S&P, same thing, still doing higher lows and higher highs. So on the weekly, it's still bullish. There's no crash. Everyone's kind of terrified of gold. Got to buy gold and silver, and oh my word. And the fact is, these guys are going to do whatever they can to keep the economies afloat. The option is the alternative is just too disastrous for them. So even if it crumbles in their hands, they're going to do what they can to cover it up and make sure we never ever find out what happened. It doesn't really matter. The point is that the market is going to continue to do its own thing in the meantime. Therefore, you must trade what you see in the meantime. Okay. Don't assume the crash is going to happen tomorrow. Don't look for signs of the crash. The crash will occur over several days, maybe even several weeks. It's not going to be instantaneous. And don't go, just trade it. If you just switch your mind off from that, you'll make consistent money on the way down, on the way up. It doesn't matter. But don't get an idea stuck in your head. Don't think the world is flat. The world isn't flat. All right. So we've got high highs and high lows. Now we started to break on the daily, breaking down. Same thing, lower lows, no highs. Now we have a reversal here on the S&P as well. I don't know if it broke that previous high. I think it did. NASDAQ, which was incredibly bullish. Wouldn't it be interesting to see it come back to a level? Really nice to see it come back to a key level. Something that we can recognize. Not only that, but we can out of curiosity, what's our Fibonacci retracement? Let's just see if we can find anything. I mean, this is, oh, there we go. The 618 lines up at that level. Look at that. 618 comes back, so price could potentially come back to that level before it goes long. So we might find that price still decides to reverse and then carry on long. So we're still seeing high highs and high lows on the weekly. Therefore, we are still bullish, and we're in a retracement. Okay. Russell 2000. This is looking more bearish. So if we go to the weekly, I beg your pardon. Here's the weekly. The weekly has given us a lower high. So that is interesting. We're looking to see price break this before we get really concerned. But that is interesting. So this is going to be the S&P's personal Mount Everest, no pun intended. But it needs to be able to break that before we could go long on it again. And look, it's still an uptrend. So we have some signs here. We have some lines that we can draw that will give us clues as to what's going on. And everyone's always kind of wondering, where do I put the lines? Do I put them there? Do I put them there? I'm being conservative. I'm going to put it right here so that price really has to go out of its way to break that trend line. And I mean it. If it breaks and it comes beyond 3 or 4 pips of that, even if it doesn't collapse immediately, that's continuing the bearish story that we see unfolding here. So you need those things to kind of confirm your stuff. So the Dow Jones, S&P, and the Nasdaq all a little bit more bullish. The Russell 2000 only one of the weekly that's showing a lower high out of those 4, and then out of the 5, including the UK on the weekly, we have what appears to be a head and shoulders pattern. All right, so here's the one shoulder, there's the head, there's the other shoulder. And this is also potentially a warning sign. And it kind of makes sense because in a way, we have a proximity. The FTSE is proximity-wise closest to Europe. So it's affected by that economy, and this kind of makes sense. But all of them will tend to follow. They're all cousins. They all tend to, or brothers and sisters. They all tend to kind of follow each other. So if I would say if 3 out of the 5 are still bullish, then, and these are certainly not. I wouldn't say the FTSE is a world leader. I wouldn't say this is the leader of the pack. But it is something I will be continually watching, because as they start to shift, and if they do become more and more bearish, I will shift to bearish trades. In the meantime, we have to kind of start to look for long trades, but it is choppy. I'm not arguing that. So I go down to the daily. I'm going to demonstrate how choppy this is. So, this is what happened last year. There was a lot of, when the whole Eurozone stuff came into, with Greece initially, when the stuff came into the news, this is exactly what was going on here. And then they started introducing plans. All right. And then the market was just incredibly bullish. And this was when everyone was convinced right here Europe was going to crash, and it just climbed. So don't be stupid. Just trade what you see in the charts. If you see long opportunities, you take those long opportunities. If you see it bouncing on top of the moving averages, trade it long until at some point it stops going long. Then when you see it bouncing underneath, you take short trades. What I mean by that is if you see it moving underneath, then you should be looking for short snipers, or you should be looking for selling opportunities. That's your clue. Now look what's happening here. It appears as though it might want to try and break up and go back up above it. And so that's something we want to have a look at. We need to see what's happening with this. If I draw a line in here, there's a long history here. This is interesting. If I put a trend line from here all the way up to there, look how they match up. Look what we've got. This is so precise. So let's see what happens. We've got this, potential warning sign where we've got, sorry, I'll go to the weekly. This is just not going to happen very quickly. So we could draw a trend line sort of from here, the highest point there, down to there. So we've got that aligning. We go back to the daily, and we have this pressure point that is building up in our scene with, where price is likely to go. And so if price climbs back from here and breaks that, it's bullish. I mean, it does, because it's starting to break previous highs. And if it starts to falter and it breaks this incredibly old, sort of, I want to say old, goes back to 2009, but it's substantial. If it breaks that, in fact, if it goes even further, then we should be bearish. And one last thing, because I've been going on for a while. One last thing is, so we'll be watching that. What was I going to mention? But we have to take into account this head and shoulders. We have to take into account that this, if we see price break down solid, pretty solidly through this level, I would say that the head and shoulders pattern that looks as though we're kind of 3/4 of the way through the formation of it is becoming a reality. it's becoming a reality. And the way to trade those types of things, to look for that confirmation, is when you get, when you effectively get a break below this level. Because once you've done that, it's broken through that, and when that happens, that's going to move fast. But it can bounce. So right up until it breaks, up until that point when price comes down, it can bounce again. Be aware of that. When it breaks below that, then it's going to move, and then you'll have a big drop off, and you'll still have days to trade it, so it's fine. There's plenty of trades there. Yeah, so I've kind of given myself some nice little barriers in this that I can just keep, and I can keep an eye on these things and see what's happening. And yeah, we had some interesting things. We had what looks like a double bottom, very precise, starts to be coming up here, and we're caught in between these moving averages. And I just want to show you how choppy this was, how crazy it's been. Let's go to my, is it this one? Yeah, show you the 5-minute chart so you can see what happened. So that'll do. So Friday, here we go. This is Friday. I told you guys I'm looking to go long. So I wake up and I decide I'm going to start looking for longs. And I think I started taking this one here. Market opened. This is a 5-minute chart. Start trading it long. Make some money, that's fine. Pullback is fine, but the pullback comes so far back that I'm now a little bit nervous. Price then attempts to go long again and fails to break this previous high. So now I'm kind of getting more and more bearish. So I think actually at this point I started selling down to there. I was in profit already. Just started master trading it down there. Then price pulls back and I exit without a loss at break even. Price starts going up, but then it fails to do a lower high. So this is interesting. What we have is we have price pull back, fails to break this high, then it pulls back, gives us a higher low, which is a bullish move, but then gives us a lower high, pulls back, then gives us a higher low, then comes up, then breaks, gives us a new high. So now you think that potentially a bullish trend is going to recur. And then it breaks that, comes down, breaks all the previous lows, and goes completely bearish. Then it goes, screw that, and it goes completely up. My point is, this is completely untradeable. In the beginning, you're fine, but you don't know the day is going to be like that. And I'm going to show you what it should have been like. But you don't know the day is going to be like that, and so you're kind of trading it. And actually, at some point, you should have realized, as soon as this pulls back, that's potentially a problem. Then pulls back and fails. The problem comes when price starts to pull, doesn't actually even go further from here. Once that happens, something's wrong. You should actually just stop trading this. You should let go of the chart and go find another chart that is trending, because this is just crazy. As it happened, I didn't lose any money, but that's, I know how to trade the price action stuff, but that's just crazy. Any beginner, that's a blender. You would have got shredded in that. So then what happens? Does its move, gaps up. This is where it opens. So if I had managed to get my long move in, of course, that would have been like something ridiculous, like 30%, based on the trades I was going in it, and a lot of money. Anyway, come next day, this thing just trickles down like the most graceful thing you've ever seen in your entire life. Absolutely no problem. It's trading down. I could have just traded that. I did a couple of trades on that, made a little bit of money on it. I mean, nothing great. And it's just trading down absolutely beautifully. The point is, look at the behavior of it after this insane gap. Then suddenly you go today, you think, okay, let's try it today. Oh, no, I'm going up. Oh, no, I've got a new low, I'm going down. No, you know what, I'm going to give you a new high. No, you know what, I'm going to go sideways for a bit, then I'm going to come down a bit. Okay, no, I'm going to give you a new high. No, wait, I'm going to give you a new low. No, you know what, screw that, I'm going to give you a new high. So, again, chaos. So there's a pattern occurring here, guys. Please. There's a shitstorm happening, basically. Excuse my French. But there is something going on, this is just one of the markets that's doing this. Okay, a lot of the markets are kind of going long, but this just shows you this isn't you. This is not you. This is not your analysis. The daily analysis is king, but we can see that it's chaos. And then it goes ahead and trends fine. So the point is not to say that this is chaos overall. The fact is that it's intending to go long, it's wanting to go long, but it's waiting for this news out of Europe to know what the hell, which direction to go. It's looking at the different stock markets around the world, saying, are we in real trouble? Can we get out of this? What's the story? And so we're going to get this. And my point is, if your chart is doing this, you just shouldn't be in those charts. If you're in it, you're being a sucker for punishment. Why trade the euro, for example, if it's going like this? And again, let's just show you what the euro did today. So what does the euro do today? This is the euro today. This is that euro market today. It's going up. It's trending nicely. Suddenly gives you a new low, so it breaks the uptrend. No, it goes back into an uptrend. No, screw that, goes back into a downtrend. No, screw that. I'm going back into an uptrend. No, you know what? I'm going down now. Okay, no, I've changed my mind. I'm going up. Guys, that's untradeable, and that's not you. This is just a danger zone. So yeah, you want to be really careful about that stuff. And I want you guys, there's a lot of guilt and confusion. Oh, is it me? Is there something wrong with me? And blah, blah, blah. In this particular case, today, you're lucky it's not you. On any other day, sure, I'll blame you. But, today, it's not really you. So just be careful out there, guys. If you're going to trade snipers, make sure you've got a nice, pretty trend. Doesn't matter what chart you're trading, just make sure you do that. You might, in fact, find that the cross pairs, the cross currencies, are offering better deals. Now, I'm not guaranteeing that, but you might find they're slightly better behaved than the majors. A little bit more, less chaotic. So those are the ones you should be trading. And income generators and power swings are just chaos. Because why? Because the daily's kind of going up one day and down the next. There's no clear trend. And we're hoping that it'll sort itself out tomorrow or the next day. But I have a feeling it's waiting for this meeting that's coming up at the end of the week, and I've lost track of what it is. I don't listen to the news anymore. I used to. Like 3 months ago, I could tell you everything that was going on. I've just stopped doing it because it's just crap. So we just, we need to see. I do know that there's obviously something it's waiting for, and we can just see what the results of that are. So guys, just be careful about it. Make sure you're trading clean charts. Make sure you're going with the trend, high highs and high lows. There we go. Here's a chart. Trade pound Swissy. It's looking for a pullback. Same thing. We've seen this. We've seen a nice long move. We're getting a pullback. Going a bit sideways now because the market's going to sleep. You know what? And then look at it. There we go. There's the daily on it. It looks like it's trying to kind of go long again. So we've got some interesting stuff here. Look, we've got a downtrend. I'm just looking literally at the first chart that I'm saying, well, maybe you should trade it. Well, there we go. Yes, we do. We have lower highs and lower lows, so we're in a downtrend. So I would say if price starts to break above that, if it breaks this previous high, it's over there, starts to breaks this downtrend, starts getting there, maybe breaks that high, comes back, tests it as support, that support holds, go long. Start taking, potentially start looking at income generators or power swings and start taking pivot trades, things like that. That's just one chart. There are trading opportunities out there for more experienced traders, but they're short-lived, and like I said, even the FTSE, insane. I got a bit of a beat. I escaped a beating, but that was not pleasant. And today I took a bit of a beating on that one. It was just ridiculous. So it's fine. It's just because I was performing really well even under choppy conditions. So I thought, okay, today I'll just have fun. And it wasn't that bad. I mean, I'm still up for the week, but it's just unnecessary that I felt that I had to get into a bad relationship with the FTSE. It's just crazy. It's just crazy. So guys, just be careful about that. Look for those confirmations. Look to see it break levels, or if it continues to go sideways, be very careful. Maybe look at snapbacks if you know how to trade those. Otherwise, I hate to say it, but you have a choice. You can keep trading and get sliced and get cut, or you can just sit it out and check it every day and start to look for trends to reoccur, and not lose any money. And you really can. You've been forewarned. So just make that choice whether you want to sit it out. Trust me, the markets are not great for anyone right now. So, and when I say that, I mean, as in, yes, we can go in and I can make money if I have to do that. Absolutely, I can do that. But it's not an easy living right now. And all I'm saying is wait out for a few days, because the risk that you introduce to your trading, and this is a long-term goal for people. This is not something you want to do for a year and then quit. You want to do this for as long as you need to do to make the money and the lifestyle that you want to do. So just so treat it accordingly. Treat it with some respect. Treat yourself with some respect and say, this is something I'm committing to long term, and therefore I'm not going to mess with it too much. I'm going to treat it. I'm going to treat my own trading plan, which is a reflection of how I'm going to behave, my own behavior in the market, and I'm going to treat that with some respect. And I'm going to say, look, if the market right now is not tradable, then I'm not going to trade it. And you can at least respect yourself in the morning. Okay, that's it, guys. I'll stop talking now. Listen, just be careful out there, and if I've got any trade alerts, that's why you're not getting any trade alerts from us, by the way, from K2A at the moment, and not from me as well. It's just it is just nothing. I can't give you anything. I want to give you guys good, solid, profitable trades, and there's nothing. So just that's why there aren't any trade alerts. All right, guys. I'll chat to you soon. Bye.